Hi everyone, I'm Chad Shoop, and welcome to my latest edition of Bank It or Tank It. This week, I'm excited, and if you can't tell, we're going to be talking about a cruise line. We got a cruise ship in the background. I got sailboats on my shirt. We're going to be talking about Carnival Cruise Lines, and big thanks to Pat and Mark for writing in, telling me to take a look at this stock, wondering if it's bottomed yet and what to expect throughout the rest of 2020. So they wanted me to run it through my Bank It or Tank It analysis, so I'm excited to do that today. And I want you to keep the comments coming right below the YouTube channel, but also I want to keep this conversation going on Twitter, so you can use the hashtags Bank It or Tank It to let me know what you are banking on and tanking in 2020, and just mention me when you make the comment on Twitter, and I'll be sure to chime in with my 2 cents and give you my quick take on that stock if I haven't had a chance yet to feature it in a Bank It or Tank It video, because Carnival Cruise Lines is a good example. We brought this up actually 2 weeks ago. Pat was the first one to bring it up to my attention, told me to take a look at it. So I mentioned it in my quick take analysis about 2 to 3 weeks ago. And at the time, it was a stock that I wanted to bank on. I thought the coronavirus fears were a little overplayed, and it was an opportunity to take a look, buy into the weakness and the benefit as shares would look to rebound. So today I'm going to do an update on that analysis, and we're also going to just dive into everything going on with the stock. We're going to look at the coronavirus, its impact, how the economy is doing, and the fundamentals, the sentiment, and the technicals for Carnival Cruise Lines, so that way we can figure out the exact price target to expect over the next 12 months. So let's get started. Now, the first thing to take a look at with Carnival Cruise Lines is the idea of the coronavirus. Now, this was a major issue just a couple of weeks ago, and I understand it's a new virus, it's spreading rapidly, people are dying because of it, so there's a lot of emotions going on with this, and it's causing people to quarantine entire cruise ships, to close parks like Disneyland and other stores and other shops over in China. So it's having a major impact on the economy over there, and that's going to overflow into some of the companies, especially cruise lines. They're going to be heavily impacted, and we saw that take place since the moment that I said this is a stock to bank on in 2020. Shares have done nothing but slide lower since then, but this is exactly what I was talking about during my quick take segment. I mentioned that we would see some weakness from the coronavirus fears, and at this point I think they are overplayed, and I think now is a good chance that we can start to really dive into Carnival Cruise Lines with our Bank It or Tank It analysis today to figure out if this is a stock that we want to bank on or tank. Now, if you follow me on Twitter, then maybe a couple of weeks ago you saw me repost an article from CNBC, and in it they were just finally kind of coming back to the reality that this coronavirus is not that big of an issue, that the fears were actually overblown, and they're one of the media outlets that are overblowing it along with everybody else, making this coronavirus such a huge deal that companies and corporations and governments are having to take extensive actions to limit the spread of this virus, even though it's not that bad of a virus. And I'll explain my thoughts on that in just a second. But just understand that the impact on the economy and the impact on the stock market is overall, it's just a temporary effect. And that's what I've been saying from the beginning. And that's what now the media outlets are finally starting to tell you. And this was after the stock market started to rebound from its sell-off. So they finally came around. Here's a chart that they had in that article that I wanted to share with you today. Now, the headline of their article was "Markets Heal Quickly from Disease Outbreaks." So that right there tells you that all the fear, all the panic that they were trying to spark over this virus was really just them trying to get clicks on their articles, on their headlines. And it's just the news cycle. It's just what was running through the news cycle at the time. It was topical. And when you take a look at this chart, you see that some of these major outbreaks that we've had before, SARS, which is what they compare this one to a lot, the swine flu, measles, avian flu, Ebola, Zika, HIV, AIDS, and then the coronavirus and other ones. But when you look at these, over on the right-hand side of the chart, you see the 6-month return for the MSCI World Index. So this is all the world stocks pulled together, how they did over the next 6 months. And swine flu, well, that was 2009. So the 6-month returns are phenomenal because that was the rebound after the financial crisis in 2008. But then the bulk of these other ones, it's a positive move over 6 months. The only one with a short-term, pretty serious drop was Zika in 2016 with a 6.1% decline over 1 month. But 6 months later, it had rebounded to basically break even. And then Ebola saw a sharp drop, and then also was higher 6 months later. So the number one takeaway from a chart like this is that fears are overblown. They're always just a temporary setback. And then what we ultimately see is that the economy in the stock market gets back to being based on the fundamentals. Now, it doesn't mean that there's specific weakness in this economy or in the stock market and that they're going to see an adverse effect. Like right now, China's economy is going to take the biggest hit from this because they're the ones taking the most action, and corporations over there are taking actions to close up doors to help limit the spread of the virus. So they're going to be the ones with a direct hit. Cruise lines are also going to have a significant impact, but as soon as this goes away, and it'll go away here shortly, and as soon as the negative headlines leave, then the stocks and the economy get back to trading on the fundamentals. So today, we're going to dive into the fundamentals of Carnival Cruise Lines. But first, I just wanted to touch on the fundamentals of the economy, which right now seem to be picking right back up to where they were. When you look at earnings, this is something I follow closely. The economy had, for the S&P 500, had gone through 3 straight quarters of negative earnings growth. That means that earnings for corporations were declining for 3 quarters straight. We call it an earnings recession after 2. It had 3 quarters, so it was doing pretty bad for the S&P 500. And that's really over the last year and a half that we've seen this weakness. And that's really been in tune with the stock market basically staying flat and showing some weakness itself before it started to rise up over just the last couple of months. But that's in perfect timing with the fourth quarter earnings coming out now, showing that earnings growth is finally getting positive. And that's the first time since the fourth quarter of 2018. So this is great news for the economy, for the stock market. And it's happening right at a time that we have this kind of fear sell-off based on the coronavirus, giving us an excellent opportunity to buy the dip. And I mentioned earlier that the fears for the coronavirus not only are overblown in the stock market, but just the fear of the virus itself. I mean, Contagion, a movie from 2011, was trending on Apple TV, and my wife actually ended up watching it because it came up on the most watched list on Apple TV, even though it's from 2011, just because it's about a virus spreading. It's a deadly virus, way worse than the coronavirus, but it's still the idea of it got it picked up on Apple TV and got it being one of the #1 movies that people were watching over this fear-blown crisis of the coronavirus. And then I wanted to show you another graph today from the CDC, just comparing the coronavirus to the flu, because when I downplay the coronavirus, it's not that I don't have sympathy for the deaths that are happening or the people that are getting sick. I really understand the fear around all that, but we don't close Disney World every winter and fall when the flu is starting to spread. We don't close up all the Apple stores or stop leaving our homes. Instead, we still do what we normally do. We just know that it's a virus that's out there, that you can get the flu shot. But ultimately, if you get it, there's not much you can do then. You stay medicated, stay hydrated. We're educated on kind of how to deal with these things as long as you're healthy. And we just don't stop. The world doesn't stop spinning just because it's flu season. We still go out and do our own thing. But I want to show you this chart. Just look at the flu numbers and then think about where the coronavirus is today. Just last week had its 1,000th death, and it just has in the tens of thousands of people that have the virus. So here's how it compares to the flu. Now, these numbers are astonishing. It's 22 million to 31 million flu illnesses in the U.S. from October 2019 through February 1st, 2020. So that's the latest flu season. They have 10 million to 15 million flu medical visits and 210,000 to 370,000 hospitalizations, 12,000 to 30,000 flu-related deaths. I mean, that's an enormous number. Like I said, right now with the coronavirus, we're at 1,000 deaths. We just had the first one of an American over in China. But just to keep in perspective is that the flu is far larger, far worse. And maybe it is because we still leave our homes and we go out and we do all these different things. But when you think about the steps and precautions being made for the coronavirus, it's like if somebody gets the flu on your cruise ship, they're not going to let your ship dock anywhere. And to come off of it, you're going to get quarantined and go through a long process to try to get back into the United States. I mean, that's everyone's worst fear. And as long as this coronavirus is out there, it's going to be a tough sledding for the cruise lines this spring and this summer. But they got to get this negative feedback loop out of the way, and then they can come out strong over the summertime. So this coronavirus issue, I think, will be over here right before we head into the summer and give cruise lines enough time to make up for some of the lost revenues that they've had over the recent months. So that's where I stayed on some of these big issues that are going on right now for Carnival Cruise Lines. The coronavirus, the economy, all these things are kind of pulling and tugging against the stock and against where shares are headed. And you'll see that on a chart, that pull and tug, how it's a little uncertain. But let's dive into the fundamentals to see how Carnival Cruise Lines has been doing lately when it stacks up to their net income and their revenues. Now this is our key stats chart, and you have total revenues, which are the bars on the chart, and that's on the right-hand side, the key for that. And then net income is the line on the chart, and that's on the left-hand side. And I'll go ahead and tell you, we've looked at a lot of these charts during my bank it or tank it analysis. But one of the things that I really like about this one is that it's basically the expectations. And you can see 2020, 2021, and 2022, they're shaded. They have a little E. Those are the expectations for those years for revenue and net income. So it's a projected number based on analyst expectations for the company. But what it basically looks like is just a continuation of the trend that they've been in over the last 4 or 5 years, 2015 to 2019. You can see that earnings were volatile for net income. It surges up, then it comes back a little bit, then it jumps up again. But ultimately, it's trending in the same slope that they have in 2020, 2021, and 2022. And then revenues are the same. Revenues have made a nice jump from 2015 to 2019, and it just kind of continues at that pace, 2020, 2021. Now, the coronavirus could have a negative impact in 2020 for Carnival Cruise Lines. But based on their trends that they've had over the last 5 years, which had dealt with other viruses and other economic softness and other issues around the world, they're still come out strong. And based on the consistent expectations, you have a feeling that they're going to come out strong after the latest issue around the coronavirus as well. Now we'll jump over to the quick comps to see how they stack up against the competition. So our first column that we look at is the market cap, and Carnival is about 28 billion in market cap compared to 14 billion. So they're a rather large one. You look up here, Marriott's on there, and they're not a cruise line. They're just a travel-related stock. And same with Hilton and Wyndham. So they're related in the same industry, but you look at Royal Caribbean and Norwegian Cruise Lines as really the direct place here. And Carnival is the larger cruise ship company based on those two. Then when we look at short interest, it's 2.9%. That's as percent of the shares outstanding. So this just tells us how many investors are really willing to bet on this stock to continue to decline. And they're about average for the industry, so nothing alarming there. And then when you look at the price to earnings ratio, now that's just 9.7 times earnings. So this is extremely low. You look at the mean for the industry, 27.7 times. And the average for the S&P 500 is north of 20 times earnings as well. So this is a major discount to the industry in price to earnings ratio. But keep in mind that they have those other hotel stocks. So when you look at Royal Caribbean and Norwegian, it's more in line with those. They're just at 12.3 times and 11.6 times. So Carnival Cruise Lines is just a little below them. So it's not a major discount here, but cruise lines in general are very discounted right now compared to the industry-wide price to earnings relationship. And that means that they're an undervalued company that value investors are really going to be taking interest in here in the coming weeks. And on the compound annual growth rate for revenues and net income, Carnival's a very consistent stock here. They have 8.3% compound annual growth rate for revenues and 2.5% for their growth rate for net income over the last 3 years. Just a little shy on the net income side for their industry. Royal and Norwegian are growing at a double-digit pace, but when it comes to revenues, they're right in line with the expectations on that side. So it's their bottom line that they've been hurting on, and this probably has something to do with their price to earnings ratio being lower than Royal Caribbean and Norwegian, because investors love to see the net income growing at a stronger pace, so they'll be willing to pay a little bit more for those stocks versus Carnival. But then the dividend yield, they have a nice jump on the dividend yield, 4.8% compared to 2.3% for the industry. And Royal Caribbean is at 2.8%. Norwegian doesn't even have a dividend yield. So Carnival is showing its size here, showing that it's big enough to pay this dividend, still grow at a consistent rate, and it knows that its net income is a little slower behind its peers, but it has a solid dividend yield that value investors are really loving. They love dividends and they love undervalued companies. So Carnival Corporation is going to be a top stock for value investors at this point based on how their fundamentals look from this quick analysis. And we always take a look at the analyst rating just to have an idea about how Wall Street is recommending the stock. And right now it's at a hold, 2.57. It's barely a hold, just a little bit more lower, and it would get into the buy range just below 2.5. But still, this is out of 18 analysts, and they have it rated as a hold. And this likely has a lot to do with the coronavirus fears. They probably had it at a buy before, but now with the coronavirus building up and the weakness spreading throughout the Chinese economy, they think that's going to hit the stock pretty hard, and they have it listed as a hold right now. So it tells us that analysts are a little unsure about the stock. And now we'll get into my favorite part, the technical analysis, to take a look at how the price is doing for the stock and what that tells us about whether or not we want to bank on the stock or tank it over the next 12 months. Now I have two charts that I want to show you today, and I think I'm going to take this approach going forward. One's going to be sort of the bear case, And then the other one's going to be sort of the bullish case, because on every chart, we can make different cases for the stock, whether we're all looking at the same chart or not. Everybody's going to have a different opinion. And one of the benefits, though, is to be able to see those different opinions and understand what they're looking for. So right now, we're going to look at the bear case for Carnival Cruise Lines. And one of the main cases for this bear chart is the downward trend channel that the stock just can't seem to get out of. Now, it almost got out of it with its recent price rally, bringing it up to about $51, $52 a share. But you can see we can still draw a downward trend channel. We can even make it a little higher based on this breakout. But a lot of times you'll see it just kind of ignore these 1 or 2 day breakouts of a certain trend channel, but just continue to go lower. And then there's a clear downward trend channel on the bottom of these prices before they turn higher. And that's what anybody who's bearish on a stock is paying attention to right now, because if it breaks out of this upward price resistance, then it could be a major rally taking place. But for me, when you look at the chart, I want to know what makes me convinced that it's not in a downward price channel anymore. So breaking above that will be one, but also I like this key support line right here around $40 a share. It bottomed there back in October, and it bottomed there way back in February of 2016. So I just wanted to highlight that on a chart, because really this has been a long-term downward channel. Look, it goes back to 2017 when it peaked, early 2018, and then trended lower for 2 years now. So it's long overdue for finally breaking out of this trend channel. It just hasn't yet. But what I'm looking for confirmation that the downward price move is still intact is shares to break below this $40 price level or above this key resistance line. So those are the two things to watch if you're betting on a stock to go lower. A breakout above that or just more consolidation around this line might be a reason to go ahead and just get out of the stock if you're short it at that point. And this is our chart for the bull case for Carnival Cruise Lines. And you can see I have a different resistance level here. Instead of drawing it across the tops all the way down to this one, I have a shorter term, steeper resistance line connecting these more recent peaks. And then shares broke out of that. They had a nice rally, and that could be the start of a new upward price channel. And you can see that new resistance line right here trending higher, and then a key support where the stock just bottomed the other day to keep an eye on. This rising support line. Here's the longer term support level at $40 a share. Left that on a chart because if you're bullish on the stock and it breaks below that, then you got to get out, because then it's setting new lower lows on this trend channel that they had on the chart before, and it means shares are going to be headed much lower. So that's going to be something to keep an eye on. But this is your early warning system. If it breaks below this rising trend line right here, then that would be a concern enough for me and a big enough reason to go ahead and exit the stock if I'm long the stock. I want to see shares rebound back up here and test this resistance level and eventually break out of that to give us some real conviction that this stock is in a new uptrend and going to be headed higher. All right, now it's time to take a look at our checklist. That's all for our Bank It or Tank It analysis. But I kind of leave you hanging there on the price chart. I showed you two different cases, the bear case, the bull case. But in a minute, when I give you my price target, we're going to dive back into that price chart to show you exactly what I expect to see play out over the next 12 months. Now, when we pull up our checklist, we're going to look at the fundamentals. And when you come back to that, I mentioned that it was a value play, had a low price to earnings ratio, great dividend yield, some consistency there with the expectations for net income and revenue. So it's going to get a check mark for the fundamentals for Carnival Cruise Lines, even with the noise around coronavirus. It's a temporary issue, so it still gets a check mark for the fundamentals. And then when it comes to the sentiment indicators, we looked at a few of those. I like to use the 200-day moving average, which I didn't even talk about today, but the stock's down so steeply, it is definitely below its 200-day moving average. So that's a bearish indicator. It's listed as a hold. But the whole coronavirus fears, to me, that's really a sentiment indicator. When we see the stock react like it did recently, a sharp drop, that tells you that there's some bearish sentiment around the stock. They know it's going to be impacted. So it's going to get an X mark for the sentiment reading today. And then the price chart. We looked at a few different things on a price chart. But what I did like to see is that short-term rising trend level on the chart, and had the long-term support at $40 a share. As long as the stock stays above $40 a share, I'm going to leave it on my Bank It list for now. So it's going to get a check mark today. And it's going to be what puts the stock on our Bank It list for today as well. And before we dive into the price chart, one more time to get my price target over the next 12 months, I just wanted to give you a second to scroll right below this video, click subscribe so that we don't miss out on any of my upcoming Bank It or Tank It videos or any other insights that I share. Also, don't forget to follow me on Twitter and be sure to use the hashtags Bank It or Tank It on Twitter. You can also use the hashtag bank it or tank it all together as one. And just mention me whenever you post anything on Twitter and we can get the conversation going there as well. And if you scroll below the video, sometimes you have to click read more, but we have plenty of content right there, because one of the things that I love, and I'll mention it when we look at the price target, is that this is going to be a fun stock to trade. We're looking 12 months out, picking a price target, but as you see on my chart, there's going to be a volatile ride along the way, and it's a great opportunity to be trading this stock. So if you're a little unsure about how to trade the stock or about how to generate massive returns even on short-term price moves, then scroll below this video. I have a link that you can check out that'll tell you everything about how I love to trade stocks in my number one way to make money in the stock market. So scroll below this video and you can learn all about that. Now let's dive back into the price chart so that way we can get our price target for Carnival Cruise Lines. Now this time I figured I'd help you out a little bit more than just saying what my price target is. I'm showing you the price moves that I expect to see in the exact price target. It's $65 a share for Carnival Cruise Lines, so no surprise that we're coming back to our bullish price chart. This is a stock that we're banking on over the next 12 months, and you can see that my initial price move down here on the bottom of the chart is that I expect to see shares make a nice run up to this red resistance line before we see a little bit of a pullback, but I don't think it's going to come all the way back down to this rising support line. Instead, we're going to get a move about halfway down on this rising trend channel before it turns higher and eventually breaks out above this key resistance level, and then it's going to be able to pop up to $65 a share over the next 12 months. So again, this is a volatile stock. I mean, we saw the sell-off that we had on the coronavirus fears here. This will be a bit of a relief rally that we see come up, and then some nervousness heading into some upcoming quarters for earnings. So don't quote me on this exact time frame. I mean, my chart only goes out to June, so that's only about 4 months from now. I really expect to see this play out over a 12-month period and be kind of choppy along the way. But this is the general trend I'll be watching and expect to take place for me to keep this stock on my bank it list. And again, we have a price target, $65 a share, and it's about a 50% price move from where the stock is currently trading. So a nice size move over the next 12 months. But once again, it's going to be a fun stock to definitely be trading. So if you're not sure about how to trade it, scroll right below this video, click read more, and check out our links to learn how you can make big money on stocks that maybe you're only moving 5-10% at a time, and you can still see outsized gains before you ever get a full 50% price move in a stock. So check those videos out so that way you can learn how I trade stocks. So that's all for my video today. Thanks for tuning in to my Bank It or Tank It on Carnival Cruise Lines. Again, let's keep this conversation going on Twitter and below the video, so be sure to leave me a comment and feature my hashtags Bank It or Tank It on Twitter to mention me, and then that way I'll be able to chime in and let you know my thoughts on the companies that you all are looking at. So until next time, I'm Chad Shoop. Thanks for tuning in.